Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves, what happened today, and what does it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can catch me there, and you can view it anytime, any place, anywhere. It's up to you. Subscribe, get the content. When content is pushed, get it a notification. Makes it a lot easier for you. Looking at these markets, we talked all week that it was going to come down to Wednesday and Thursday probably. That's when the bulk of the earnings is going to hit. That's our first view of what's happening. And we had a wild day today in front of those earnings. Doesn't look like it when you look here, but when we look at the chart, you'll see it. You know, it's pretty much a flat day. Russell up slightly, everything else down slightly. DBA, gold, commodities, the copper creamed again. You actually ended up higher on silver. Bonds show us flat. I think they were actually up today. I'm not sure that's correct. We'll look at that here in a second anyway. Oil showing up 21 cents by the close. It was down earlier today, and the dollar did some gaining, some ground gaining itself. Let's go straight to the indexes here. And I don't have any questions tonight, so I'm going to spend a little bit more time looking at what's happening. Tomorrow's going to be a big day. We'll look at a few of these that reported earnings today. But when we look at the S&P 500, I've been talking about, and I believe I've been talking about it here. I'm pretty sure I talked about it last night. And that is that you kind of have three ranges going on. You kind of got this top range, and you kind of got a range in the middle. It's a little bit larger, and you got one down here at the bottom, right? And the key is, we're in the middle. Which side of the range is it going to break? Well, it tried to get over it here, didn't quite do it, right? And then it came back down, and then this morning gaps up and tries again and doesn't do it. It was a gap up, matter of fact. Then it comes all the way down, tries to get under it, can't do it, closes over it, still inside the range. Folks, when this range breaks, this kind of volatility inside of it, and this is a large range, we're talking about 40 plus points on the S&P. When it closes up here or down there, right, that's going to be the clue that short-term direction is going to be in that direction. Most likely. In other words, we're probably going to see follow-through if it's here, or we're probably going to see follow-through if it's there. And I think you got a good chance of seeing that tomorrow. If not tomorrow, then probably Thursday afternoon after the bell, when we get some more numbers. We get some banks that morning, you get Intel that afternoon. I think that Intel report is going to be a big report, because right now Intel has been the strength in the tech sector in terms of large caps. If I pull Intel up and look at it, you can see how it's up here hanging. And if we pull this back a little bit, put it on a weekly, Intel's had a beautiful run, right? Intel had been stymied at the $30 mark for over a decade. And back when it was breaking out, and we actually traded it long in the TA today, when it was breaking out here over the 30 mark, and this was right here at this place, what was that, June? I'd said that was going to be a big move. And when it came back in October, we bought it again at that 30 area. We got a nice run out of it again. And if you look at Intel, right, and this is all because Intel's earnings have been good, right? They've been poking up on their earnings, getting more and more. But if you look at Intel and you look at these pushes, right, you've kind of had these pushes taking place. They're kind of equidistant. This last one didn't actually get to where it was trying to go, and that was up around $39, $40. Is Intel going to get up here or not? I don't know. Right now it's set up that it can. And, that's going to be a big number Thursday afternoon when it comes out. And, we just have to see if they can push it up there. Right now it's set up to potentially get that push. And so I don't want to discount Intel. All I'm saying is, Intel set up nicely, and it's going to be a big report on Thursday evening. As far as big reports near term, it's going to be the financials. So let's take a quick look at these again this afternoon. Now, JP Morgan and Wells Fargo are the ones that are going to report first thing in the morning, and these are going to be huge reports. Here's Wells Fargo, and I was asked last night what I thought about it, and I was telling you last night that this is a retest, regenerate to the downside, and I'd be very careful being in this thing because you've got an ABCD structure that's in effect as of tonight that can take this all the way back down to this gap area. And last night it wasn't in effect. Tonight it actually is, and you had some volume expansion today. I think this is a dangerous setup. Anything could happen on earnings, so I never try to make big bets in front of it. But let's look at JPM while we're here, and it's just hanging there, and volume expanding, and it's just hanging. And so it's tested last night, held, tested again today. It looks like on this big bar. 58.35. Today's low was 58. Now it didn't quite test, but almost. But you can see the volumes aren't there yet. The volumes will be there tomorrow. If this breaks lower, it also, just like Wells Fargo, has the ABCD structure to the downside. And it probably will break with volume if it happens. And if it does, what's it going to do? It's going to come right back to this gap area in that October time frame when the market's gapped up. And so all of them are set up, financials are set up that way. If you look at the sector, today started to break down again, doesn't have the volume, but it's down here sitting at this low trying to wait to see if it's going to break. If it does, the big bar over here is where it wants to come back to, and the gap is right below it. This also has the exact same structure. And then if you turn to Thursday, you got Citigroup, which is already breaking, and you've also got Bank of America. So you got all these big cap banks this week. Here's Bank of America also breaking today. ABCD structures down. I don't like the looks of this. I think this is a problem. And if we go back now to the S&P 500 and look at it one more time, we're going to see, closes in the middle, not much change, but it tested up and it tested down, pushing a little bit more volume, still not pushing as much volume as you had back here on the Fed spike, right? But tomorrow you're probably going to see a big pickup in volume as a result of who's reporting. And if we go inside this tonight and look at what's happening, I want to talk about, and I'll just digress here for a few minutes, I want to talk about what happens in these scenarios, right? Now we'll pull this back 5 days to start with. And let's just kind of imagine what's going on as a trader. When I get in, I'm going to pull it back 10 days. Let me see here. Yeah, so 10 days. You had in this market, right? You had the first of the year, you had the end of the year, and what we saw end of the year into the first of this year is you saw this downtrend. You had a big push to the downside from the top, and I'm looking at the SPY, so we went from like 208, 209 roughly to 199. So essentially we dropped something like 10 points on the S&P, which percentage-wise is a decent percentage. Then we get a little bounce, and then you spike up, right? Gap up. Okay, so what is everybody thinking on a gap up? We have seen so many, V-shaped reversals that I'm sure everybody on this gap is thinking V-shaped reversal back to the highs, back up here. But instead, kind of go sideways here. And then we start out this move right on the 12th. We start out with a push down. Actually, it started here and then pushes down. Then you get the spike up again today, another gap up today, and what do? They sell it down again. Where are most of the people buying this thing? They're not buying at the lows. They're not buying down here somewhere, right? Maybe you had some buying in here yesterday, but probably not that many after this big spike down. The big buys have been here and here, right? That's where most people have bought. Well, where are we now? We're down here. Okay, so let me get some of these arrows off and just draw that again. Where did most people buy over the last 4 or 5 days? It was either here or up here somewhere, or it was here or up here somewhere. That's where the majority of the people have bought. It's not down in this congestion area because you had steep drops, and I'm sure they weren't loading up on the way down. You had steep drops here. Again, I don't think they were loading up on the way down. And you had them again today, and I doubt seriously if they were loading up down here today. Right? The majority of the buys, and you can, we haven't had a lot of volume, so it's not like, a lot of volume's coming into this, and I'm using the SPYs because the SPX you can't get the intradays, or at least I can't. But I can guarantee you most of those people bought up here. They didn't buy down there. Now, the point of this whole story, and I'll get to that now, is that with price down here, these buys are all underwater. Now imagine a scenario tomorrow where these buys that all occurred up above this line do not get bailed out. And everybody was thinking what? V-shaped reversal back to the moon, right? That's what everybody was thinking. What happens if it comes down here and starts breaking this down? Well, whoever bought is going to have to start making decisions, right? Are they going to hold this? Is this where they really want to be holding, or are they going to start dumping? That is the dilemma if you're in this market right now, and if you bought these spikes, right? If you bought those spikes, you're underwater, and if, Lord forbid, if we get down here tomorrow, you're kind of in deep doo-doo, right? Now, going back to the S&P chart with the TA Today charts. Down here is underneath that middle area that we were just talking about, which is essentially this bar. Under here is under this bar. If you get under there, all you have is this little support here. It's got some decent volume on it, but really the support is back down here. So a move down tomorrow morning off these financials, if that's the way it works, is probably going to set up that ABCD structure on the way down. That's going to take you down and break this and bring you back into these levels if it sets up that way. And honestly, when I look at it tonight, it looks like it wants to set up that way when I look at just the indexes. But of course, we don't look at just the indexes. We also look at what else is going on. For example, oil. Oil has been the big problem, right? Well, oil today makes a new low, spikes back up, closes above it. Is it washed out? Well, here you don't have the 2-bar reversal, but you have an over-under. But it's not easy to get a good read on this with the ETFs because you actually have a competing one. This one's doing, let me see, this one does 4.2. How many? This one used to not do that many. Let's see how much USO does. I actually like OIL better, but I use USO because it always had the most volume. Still does by far. So 30 million over here. But the OIL now actually had less volume under back over. Which one is telling us the real story? I don't know. Is this thing washed out enough? I'm telling you, this is going to have a huge bounce when it has one. I just don't know where it's coming from. I told members that today. So I keep watching it. I keep looking for the opportunity, right? But there's no reason to jump into this thing until it tells us it's got a bottom in. And so far it hasn't told us that. We had a fake, under over on Friday, and we gapped down off Goldman. Now we go a little bit lower and back up. The test is going to be when it comes back up. That's oil. Let's look at some of the other stuff like bonds. What happened to bonds today? Remember we were saying they probably will come back up and test that top. 132.49. Where does it go today? 132.61. Gets over it, back under it, has less volume. That's a failure. What should that do? Well, that should bring the bonds back down. If so, that should be decent for equities. That flies in the face of what I just talked about on the indexes. So that's kind of a quote-unquote negative with respect to the indexes. How about the dollar? What is it doing? Let's go get the dollar. UUP on the dollar. If we look at it, we've got this high, 24.42. We get all over it, back under it, less volume. Dollar looks like it wants to come back. That also should be good for equities in general. Short term, anything can happen, but in general, that should try to bring this back. This coming back should be supportive to the equities. So as you can see, it's not as clean a picture as just the one thing, right? I do not like the way the XLF looks. I've pointed that out before. I still feel that way. I think there's some serious risk in the way these things are trading, the XLF in particular. So speaking of that, let's go back and quickly, because tomorrow's going to be a big day, let's go back and look at some of the sectors. Let's start with the biotechs. Biotechs go up, make a new high, and they had more volume, yet they failed. So that's pressing with volume. You probably try to test again. So the biotechs are still up there. Another sector, one that has been looking really good, was the ITB. Volumes were looking really heavy until today. Now look at the volumes. Volume swells tremendously today. That typically marks a top, especially when you see this kind of a reversal, right? So this market all of a sudden doesn't look nearly as good as it did yesterday. And if we take a look over here at the weekly you can see it gets over the top, right? It had the volume last week. Now it gets over, it's going to have even more volume. This suggests to me that what looked to be a spike up that had some continuation to it, maybe not that may not be the case. And so why did this do it? Well, we're earnings season, right? And if we look at earnings, we had was it Lennar? It wasn't Lennar. Let me see. It was, who was it? Oh, KB Homes, KBH. That was the stock. And the story here on KB Homes, look at this drop. I mean, and it actually started out higher today, and this was part of what started driving the market down. 34 million shares, down 16% today. And their numbers were okay. They actually had, let's pop these guys up. Let's look at their numbers. See how they started today? The numbers off the earnings report looked okay. It was when the conference call kicked in that this thing got beat up, and it never recovered. And so if we look at what that was, right, if we look at the details, that the management on the call, from what I read, they said that it was unlikely they were going to reach their gross margins in terms of what they expected to get for 2015, which was 20%. They also said that they were going to have a sequential decline in their home prices in the first quarter. In other words, they're going to have lower price on the sales, and that's why they're not going to meet those margins. And as a result of that, they lowered their EPS for the next quarter to I think it was 0.17 if I remember right. They got hammered, got totally hammered. And that's another one of the earnings that came out today. And you can see how earnings can be extremely volatile, not just for that stock, but even for the whole sector. Now, there's other stocks in that sector are going to report soon, and it may turn. Maybe it's a one-off. Maybe it's just KB Homes. Maybe it's not these other companies. I think the next one that comes up is Lennar, if I remember right. Everybody's going to get hit today, but they were up here testing highs, have volume, come off. Maybe it's the one-off, right? You don't know that. But if it's pin action and these others start falling like dominoes too, if they have the same issues, then that whole sector is blown up. And so that's one of them. Let's look at Alcoa. Alcoa reported last night. They actually got a little bump up this morning, then they gave it up, down 2.25%. So the start of this earnings season, at least the first couple reports, don't look that hot. I saw CSX after the bell was up. That doesn't look like that's going anywhere. They had a retest, regenerate lower. CSX, I would be surprised if it doesn't trade down tomorrow. even though it was up after hours. So, you know, I think it's going to be a tough row here, especially if I, you know, considering what I see on the financials. Here's the, let's go through the rest of these major sectors, just see if there's any other surprises. IYT set up for a push down. SOX can't do anything. Remember, I was talking about Intel earlier. SOX still isn't in trouble, but can't do anything. Of course, the whole market is pushing against it right now. XLB got hit because copper was getting crushed today, and some of the copper companies were getting crushed. And let's look at copper here. Yeah, look at this. Look at this, man. Talk about just getting hammered. Going to a weekly and a monthly. This is starting to look like the oil market. If copper's not selling, how are the economies of the world doing better? I've been telling subscribers and have been pointing out here, you know, the numbers are getting worse, not better, at least over the last 3-4 months. If that doesn't get better, how can the Fed raise rates? What's all this nonsense about raising rates? You know, I've said many times, I don't think the Fed's going to be able to raise rates whether they want to or not. And part of it is just dollar strength, and part of it is all this weakness we see. XLE trades lower, got a little bit more volume, still doesn't have the volume to blow out the bottom. Does have an ABCD structure to the downside though, and so that's a potential, you know, test of that low, and if it gets under it, it extends to that ABCD structure. XLI industrials, they come down, decent volume. Yeah, when I'm looking at the sectors here, these seem to support the indexes. XLK was the lone bright spot today. Held up, down 0.07, not much. XLP, discretionary, pretty big volume, but holds up. XLU was actually a little bit higher today. That's kind of a safety play. XLV off IBB was a safety play as well. Let's see what that one looks like. Didn't really do anything, just closed the gap. And then consumer discretionary, let's see what she looks like. And that one looks about the same. So sector-wise, seems to support the indexes. And let me quickly take a look before I run out of time and just see if the world markets are telling us anything. So let's just quickly pop through these and see what these look like. So the all ordinaries, not doing anything tonight. Looks like they're trading down. Hang Seng, excuse me, the India market. And that one is also trading down tonight. Okay, so it looks like these markets overnight are trading down in Asia. Let's go to Brazil. Okay, so Brazil traded down today. Brazil looks terrible. Has looked terrible and still does. The CACs. Now this is the one area we keep seeing strength, and that's based off the ECB hopes. Going to try to test the swing point high. And you know, the reason we've gapped up the last 2 days is because of Europe. Europe has been up, was up yesterday, up again today. Tomorrow, Europe's going to try to test that swing point high and that gap down. That's the breakdown bar. And when I say Europe, I'm talking about the CACs. This is your breakdown bar. That is a tough spot to get over. You're almost to it. I wouldn't be surprised to see these guys gap up and fail. That's the way that kind of set up. Let's look at the German market, which is stronger. And that one is at the highs already, which is the breakdown area. This will be the market to watch tomorrow. Does it actually trade higher or not? If it does and holds it, you know, then the German market's going to hit that 10,000 number again. It's just right at it. But I suspect it's going to fail here. I don't think, you know, everybody believes, I mean, speaking about, you know, when you think about it, this is all based on the hope that the ECB will buy sovereign debt, and that, of course, the unleashing of quantitative easing in Europe is going to push those European markets just like it pushed the Japanese markets, just like it pushed the American markets. And why shouldn't it? Well, it should if the program A happens and B is large enough. And I don't know that we know either of those are going to come true. And so this is like based on hope. Maybe it will happen, maybe it won't. All I can say is that if you're basing this on the prognosis that that is going to happen, those two things, and they don't, it's going to be an ugly repentance as a result. Let's go to Toronto, and that's next Thursday. That's going to happen. Toronto, of course, commodities still struggling. China, I'm not getting the quotes here in terms of volumes yet. I've got to switch over at some point here when I have some time. But price-wise, these guys are just going to hang up here. Hong Kong, I saw, was up last night. It looks like they're up again tonight. So Hong Kong is up there pushing. And let me see. Yeah, they're almost there. So they're going to push the highs. They're going to test them. Korea. And not much happening with Korea. And let me see about Japan. Still testing the lows, and they're still holding this gap up area. Two swing point lows down there. If they break under this, that's going to get ugly. And that's after, if you remember, that's after huge quantitative easing drove this thing back up to the highs. And finally, let's look at Taipei hanging at the highs. Okay, so when I look at everything and I think about the catalysts that are coming tomorrow, I'm not that optimistic. I think there's a good chance, and I'll show you what I believe we have a chance for here in what looks to be the more likely case given everything I see. And that is if I pop in here and look at this on the S&P 500, it just appears to me that unless those financials really surprise me in the morning and their charts aren't telling me the truth, it appears to me that what you're going to see is you're going to see this thing spike down. I don't know if it's going to break these lows tomorrow, but I think you're going to see this thing spike down, eventually over the next few days come down, test these lows, probably break under them, right? And then that will set up some sort of a bounce. That's kind of the way this looks to me. Maybe I'm wrong. So far we haven't broke. We're still in this range. There's nothing telling me that. I'm just telling you gut trader instinct here. That's what this looks like tonight. We'll see tomorrow. It's not that far off. Tomorrow, Thursday, those are the two big days this week. I believe those days are going to set the tones for earnings. And then the last straw will be the ECB next week in terms of direction for the rest of the month probably. So let's see how it plays out. That's my thoughts. I welcome yours. If you want to give me a ring and tell me what you're thinking, and what you'd like to hear or what you think should happen, could happen, whatever. All you got to do is pop over here, come to NeoTA TV, pop in here, down here. You can write me, text me. I'd love to look at your stocks and entertain your ideas. That's it for tonight, folks. Have yourself a great one. Thanks for joining me. Take care, and I'll see you next time.